It looks like the spring selling season's really come alive, with the latest My Housing Market report showing that home prices accelerated again over October. In fact, it's been the strongest monthly gain in nearly 4 years. Lower interest rates seem to have re-energised buyers, and all our capital cities are now showing price growth. We're in fact seeing some remarkable resilience to all those negative messages in the media in what remains a chronically undersupplied housing market. So welcome to Property Insiders, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's property markets. So whether you're an investor, a home buyer, or simply property conscious, this is where you're going to get the real story. And Andrew, your latest My Housing Market report showed that national capital city house and apartment prices jumped again.
Yes, Michael, plenty of momentum in the market. We've discussed this over recent months. We felt that this would continue to accelerate. I think we've still got momentum from that previous or the latest interest rate cut, which was, of course, August. I think that's still working its way through the system. I think we're now starting to see not just confidence in the market, but buying decisions being brought forward. Of course, that's called fear of missing out, FOMO.
Yes.
And of course, over October, we had a surge in first home buyers. I don't think the impact of that first home buyer activity, courtesy of the government's first home buyer policy that it announced, I don't think that's into the market yet. And we'll continue to see that in terms of price outcomes over the next few months as the year finishes. But yes, another strong month. And of course, the seasonal effects of the spring selling season, we also indicated that would be a driving force. Of course, it is the focus of housing market activity generally through the year, the spring selling season. We certainly get activated buyers and sellers in the marketplace, and it is traditionally the strongest period of activity throughout the year. So I guess, is it a perfect storm, Michael? Lower interest rates, we have a strong economy still, even though a lot of naysayers were shouting to the rooftops doom and gloom with that higher unemployment rate over September. But nonetheless, still a relatively low unemployment rate, record participation rate. As you mentioned, we're still undersupplied. Some concerning signs that what was a bit of a boost to new dwelling approvals this year is now starting to run out of steam. So no surprise that prices are accelerating. So let's have a look at the data, Mike.
Well, before we get into the data, there are two separate things. We also got the most recent CPI figure, which means that an interest rate cut's going to be off the table for at the November Melbourne Cup meeting. But Andrew, you've for the last month suggested the Reserve Bank maybe started cutting a bit too soon. So I don't think this is going to surprise you, is it?
It's not. I think that we could say that the Reserve Bank was a little ahead of the curve in terms of its interest rate cuts. It had consistently said that its plan was to cut interest rates as the inflation rate that it prefers, and that's the quarterly underlying inflation rate was consistently, it said that rate had to be consistently within the midpoint of the target range. The target range is 2 to 3%. So we needed to have a consistent period with the target meeting that sort of 2.5% scenario. It hasn't done that. It's now breaking clear. The latest data showed us that those measures, the quarterly measure, which we won't see from now on, it'll only be the monthly measure, but it's certainly now at the end of the target rate, and some of the measures of inflation are now outside the target range. Obviously, it hasn't met that scenario, and maybe we could just speculate that there was maybe one too many interest rate cuts, but that's okay, Michael. It means we've got an interest rate cut in the bag, and I'm sure homeowners won't be complaining given how housing markets are. But I'm not sure if inflation did continue to become a problem. I'm not sure it can be fixed by higher interest rates, but it would be, if it did occur, it would be just giving back that one interest rate cut that we had that was probably a little bit ahead of the game in terms of the data. But that's all fine. And I think that, we're in for a period of settled interest rate policy now. There are twin tensions, maybe some easing in the business cycle, and certainly the prospect of higher inflation, because I don't think electricity prices are going to be any lower. In fact, they'll continue to rise. We know that because we don't have the benefit of the subsidy. But, Michael, we might have the government acting again to support elected.
Well, they're a little bit red-faced with that, so they may. Now, before I ask you to go through your figures each month, I put a little disclaimer because we have lots of new viewers, lots of new listeners. So when you talk about quarterly median house prices, which the charts are going to show and which you're going to be discussing, we're actually not talking about 3 months growth. We're actually talking about monthly growth of the last 3 months over the previous 3 months. It's a rolling quarterly figure that you report, Andrew.
Yeah, and that gives us the opportunity to take 3 months of data. I think 1 month of data, unless you're manipulating it, tends to be a small amount to get a sustained and a reliable figure because there aren't as many observations. So we take the 3 months where you get certainly more sales being measured, so it's a more reliable and robust measure, but we advance it, as you said, Michael, month by month. So it shows you that underlying trend. So I think it's the best of both worlds. It gives you a higher volume of observations, so you have more certainty in terms of the data, but you're advancing it month by month, so you can see that underlying trend, how it changes from month to month.
Let's start with the houses first, Andrew, and then we can look at how the apartment market performed.
Very strong result for houses, Michael. We had the national weighted average capital city median house price up by 1.6% over the October quarter compared to the previous September quarter. That's the highest growth rate that we've recorded for nearly 4 years, Michael. So we have to go back to November 2021 to see a higher result. And of course, that was the bounce back period following the end of lockdowns from the COVID pandemic periods. There was a reason we had strong growth.
And it's also when interest rates were remarkably low at
right.
wartime levels, really.
That's right. So there was a lot of contingent factors then that added to a very strong prices growth, and it was coming from a period of weakness through the COVID period. Where, of course, lockdowns affected the capacity to purchase properties. So this is a remarkable number, very strong number. As I said, we've got the drive of lower interest rates, still strong economy, momentum, and the spring selling season are all pushing prices up. And even though we're starting to see, as usual, in terms of seasonal impacts, just a little easing in activity, certainly clearance rates in the auction market, which are still strong, but that's what we tend to see as the spring selling season advances towards its conclusion. So I would still expect to see strong results for November, but maybe this will be the peak of growth. But if it is the peak of growth rates, Michael, it's a very strong result nonetheless. And it is
You're not suggesting that prices aren't going to keep growing. They're not going to keep growing as quickly.
This is a very strong result. Dare I say, in terms of the national data, this is a boom time result, Michael.
Well, if you multiply it by 12, it definitely is.
It definitely is.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole, we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased.
Without lower interest rates, although I still think lower interest rates are driving the market, we won't see that momentum, but I still think there's momentum in the market. And I wouldn't be surprised if we saw even higher growth rates over November, but we'll wait until we get the data to reveal that. But at the moment, we're looking at the latest data, hot off the press, which is for October. So all capital cities, Michael, reported, and just on the annual results, the national house price is now up by 8.3% over the past year. I'm not sure we'll get to 10%, Michael, but we're certainly challenging the prospect of a 10% or double figure price outcome for the national house price for the year 2025. All capital cities reported higher prices, Michael. In fact, all capital cities were higher by 1% plus over the month, and that's the first time we've seen that for some time.
Yes.
to that post-COVID period to see not just all capital cities rising, but rising by more than 1% over the month. The Darwin market, which is certainly booming, having revived after a lengthy period of subdued activity, up by 3.3%, was the top performer. Adelaide and Brisbane led the charge of as usual, the major capitals. Adelaide up 2.2%. Brisbane up 2.1%. Another very good result for that revived Melbourne market, up by 1.5%. Michael, similar to Hobart. And Canberra and Sydney were each up 1.2%. So some very strong results. So not surprising because as we discuss those auction clearance rates every week, we know that those higher clearance rates translate into higher prices. The usual suspects are leading the charge over the past year. Brisbane up by 13% over the past year to October. Darwin up 18.7%. Very strong market in Darwin. And Perth up 11.3%. So some very, I guess, satisfying results if you're a homeowner in the
Yes.
capital cities there to see just how strong house prices are rising. Not quite as strong for unit prices, Michael, but unit prices were up for the 9th consecutive quarter over the month, but up by 1%, which is still a very solid result. And unit prices are now up 6.3% over the year. That's national weighted average capital city unit prices. Again, Brisbane, we keep talking about Brisbane.
Yes, amazing.
Was the top performer. Just no sign of slowing down for units. 3.2% rise for Brisbane units.
1 month. Yeah.
1 month, which is very, very strong and well ahead of the rest. Melbourne, again, some very good results there for Melbourne units, up by 2%. It's interesting that Melbourne units are outperforming Sydney units at the moment, but they are, of course, coming from, shall we say, a long way back. So they're still in catch-up mode, but definitely catching up. There's no doubt about that. A couple of falls there for the smaller unit markets. Hobart down by 1% and Canberra down by 1.3%. But when we're looking at the annual results, speaking of Brisbane, up by 19.7%, the Brisbane unit price over the year so far, or over the year to date to October, the annual result. But look at Brisbane's results over the past 2 years, Michael. Brisbane units up by 50.4% over the past 2 years. Adelaide similarly up 36.3% and Perth up 42.9%. Adelaide and Perth are smaller unit markets, but Brisbane certainly has a substantial unit market, but 50% increase plus for Brisbane units over the past 2 years. And with the latest results, Michael, just no sign of slowing down for Brisbane units. And as we say occasionally, it wasn't that long ago when the so-called pundits were saying that the Brisbane unit market was saturated and oversupplied, et cetera, and there'd be no prices growth, for decades. But that's certainly proven wrong, and a very, very strong market, the Brisbane market, not just for units, Michael, but also for houses. And, no sign of slowing down and still leading the capital city markets. And as we do mention, Brisbane is now, in terms of the median house price, more expensive than Melbourne. Who would have believed? But just a sign of the times. And also the Brisbane unit price is higher than the Melbourne unit price as well. But interesting results, strong market. We expect this, Michael. There's still plenty of momentum for both units and houses through to the end of the year. We'll be heading now into the end part of the spring selling season, post the Melbourne Cup Reserve Bank meeting, which always signals the end phase of the spring selling season. We will see, typically, we do see an easing in clearance rates, which still remain strong as we get more stock coming into the market, providing more choices for buyers and more competition for sellers. But these are very strong results, Michael, not a surprise. And as we said at the beginning of the show, it's an accelerating market at the moment.
Well, it's underpinned by strong fundamentals that are not going to change in the short term, no matter what happens to interest rates. And these are all combining to push property prices higher. As you've mentioned a couple of times, fears coming in. There's definitely FOMO. There's definitely a wide number of people now wanting to invest in Melbourne, apart from home buyers thinking that the market's moving on, because they're seeing the Melbourne markets coming from a period of languishing, lagging for a number of years. We'll be back each Tuesday with our weekly property insider chat to see how things are going. But as you say, the cycle's still got legs, and we've got a good couple of months ahead still in our housing market. Look forward to catching up with you next week.
Thanks, Michael.